So next we will see levy and collection under IGST. In this levy and collection under IGST, we have all IGST Act related provisions. In that, meaning of India, meaning of interstate supply, section 7, meaning of intrastate supply, section 8, export of goods versus export of services, deemed interstate supplies, and the concept of zero rated supplies. So these are the things that we have. So let's see what is the meaning of India for the purpose of GST. India extends up to 200 nautical miles from the baseline. And what is that meaning of 200 nautical miles? So from India baseline up to 12 nautical miles is known as territorial waters, beyond 12 nautical miles and up to 200 nautical miles. So the entire baseline up to 200 nautical miles is known as exclusive economic zone. And what is considered as taxable territory? The land as well as up to 200 nautical miles from baseline is known as taxable territory, that is India. Beyond 200 nautical miles is known as high seas or non-taxable territory. And suppose if the location of supplier and place of supply both in the land, then it will be either intrastate supply or interstate supply determined under section 7 or section 8. If the location of supplier is in the land but the place of supply is in the territorial waters, that is up to 12 nautical miles from the baseline, then the place of supply will be determined under section 9. That is nearest to coastal state will be taken as a place of supply, and accordingly we need to determine the nature of supply. And we should remember that the section 9 will override section 7 or 8. So once it is supply in territorial waters, we need to determine the place of supply only as per section 9. Then next we have, suppose if the supply takes place beyond 12 nautical miles and up to 200 nautical miles, then in that case it will be deemed interstate as per 7.5c. If the supply takes place beyond 200 nautical miles from the baseline, then it is supply outside India. So place of supply outside India, then it is deemed interstate under 7.5a. So these are the aspects related to this definition. Then section 8 talks about intrastate supply. So what is intrastate supply? So as per section 8, if location of supplier and place of supply in the same state or same union territory, then it will be intrastate. Whereas some transactions, even though supplier and place of supply in the same state, it will never become intrastate, like supply to SCZ, supply by SCZ, or import of goods or supply of goods to a tourist. Even though supplier and place of supply in the same state, it will never be treated as intrastate supply. Then meaning of interstate supply as per section 7. As per section 7, 7 subsection 1, 7 subsection 3, if location of supplier and place of supply is in two different states, two different union territories, a state and a union territory, then it is interstate supply. And as per 7.2 and 7.4, import of goods and import of service always treated as deemed interstate supply. As per section 7 subsection 5 clause A, if the supplier in India and the place of supply is outside India, then it will be deemed interstate. 7.5a, 7.5b, like supply to SEZ or supply by SEZ. Then 7.5c, supply in the taxable territory not elsewhere specified. Two situations we have. Situation number 1, supply beyond 12 nautical miles and up to 200 nautical miles, or if the place of supply is determined under section 13 and that is in India, always it will be deemed interstate under 7.5c. And as supplier in India, place of supply outside India, so it will also become export of goods or export of services. So can we say export of goods and export of services is deemed interstate? Yes. So as supplier in India, place of supply outside India, in case of export of goods supplier in India, and in case of export of goods taken from India to outside India, the place of supply will be location outside India. So export of goods no doubt will become deemed interstate. And also export of services, 5 conditions should be satisfied. Supplier in India, recipient outside India, place of supply outside India, and consideration should be in convertible foreign exchange, but wherever permitted by RBI, it can be in Indian rupees. Where is it permitted by RBI? Services to Nepal and Bhutan, and money credited in the rupee vostro account maintained by a foreign bank outside India. Then last, supplier and recipient are not two establishments of the same person. If these 5 conditions are satisfied, it is export of service. In the 2 conditions are already satisfied, that is supplier in India, place of supply outside India. So due to that reason, we can happily conclude that export of goods and export of service are deemed interstate. So about this, so this is about that place of supply under section 13, that is in India. So there is an architect. That architect is located in Tamil Nadu, and Elon Musk in US. And architect provided the construction services in relation to the property which is located in Tamil Nadu. So now we need to determine the place of supply under section 13, because the supplier in India and recipient outside India, we need to determine the place of supply under section 13, and the place of supply will be location of immobile property as per section 13. Always place of supply will be location of immobile property. So what is the location of immobile property? That is Tamil Nadu. So supplier Tamil Nadu, place of supply Tamil Nadu. Then also it will not become intrastate supply. Why? Because this is place of supply determined under section 13. So due to that reason, it will become deemed interstate under 75C and it will not become intrastate supply. Then meaning of export of goods, export of services. Export of goods and services given under section 2. Export of goods means taking goods from India to a place outside India. Consideration need not be in convertible foreign exchange for export of goods. However, it will become export of goods, it will become zero rated, but if you are not able to realize the consideration in convertible foreign exchange within the time limit specified under FEMA. What is the time limit specified under FEMA? That is 9 months from the date of export. Then whatever refund which we have already claimed will be recovered along with interest, and if you voluntarily pay within 30 days, you will pay only that. If you are not voluntarily paying, they will recover along with penalty. So consideration in convertible foreign exchange is not a condition. However, if the foreign exchange not realized within the time limit under FEMA time limit 9 months, and refund can be claimed, refund claim shall be recovered. So you need to voluntarily pay after the time limit, after the expiry of time limit within 30 days along with the interest, and if not, they will initiate the recovery, and now they will recover even the penalty also. Then for export of services, section 2 clause 6, where the supplier should be India, recipient outside India, place of supply outside India, consideration convertible foreign exchange, and it can be in Indian rupees if permitted by RBI. Supplier and recipient are not merely establishments of the same person. And there is one important point. Suppose if there is a recipient which is same establishment but incorporated separately. For example, I have a branch office, head office in India, branch office outside India, and that branch office is separately incorporated outside India as per the law of that country. Then will it be treated as two establishments of same person? No, as it is separately incorporated there, so means they got a separate identity there. Due to that reason, it will be called as a different person. It will not be called as two establishments of the same person. Supply from a company incorporated in India to its establishment outside India, which are incorporated under the law outside India, would qualify as export of service subject to fulfillment of other conditions. In the following two cases, consideration can be received in Indian rupees as permitted by RBI. What is that? Services to Nepal and Bhutan, payment credited in special rupee escrow account maintained by bank outside India. Then deemed interstate supplies. There are some transactions which are regarded as deemed interstate supplies. What are they? Supply to SEZ, supply by SEZ. Import of goods, import of services. Export of goods, export of services. Supplier in India, place of supply outside India. Then supply to a tourist. At present it is not effective. Then next, supply of goods or services beyond territorial waters and up to 200 nautical miles from baseline. So then supply, that is supply in taxable territory, not elsewhere specified. Then supplier in India, place of supply also in India, but place of supply is determined under section 13. Then next, security lending under SEBI and priority sector lending certificates. Thereafter, last point, advances received and you don't know whether it is intrastate or interstate, it will be treated as deemed interstate. These are the 10 transactions which are always treated as deemed interstate. Therefore, the applicable GST will be IGST. Then as per section 9, supply in territorial waters, that is up to 12 nautical miles from the baseline. So what we need to take? We need to see the nearest coastal state as the place of supply or the location of supplier. If the location of supplier or place of supply is in territorial waters, then the nearest coastal state or union territory shall be taken as location of supplier or the place of supply. For example, there is a marine engineer who is located in Tamil Nadu and he is providing the repairs to a ship belonging to a foreign person. Now in that case, the place of supply will be taken as section 13. Why section 13? Because supplier in India, recipient outside India. So therefore section 13. As per section 13, performance based service in relation to goods. We should take location where service are actually performed. However, there are 4 exceptions. In that 4 exceptions, repair services to ship, we need to take location of recipient only as place of supply. But if it is used for the business purpose of the recipient, if it is not for the business purpose of the recipient, we need to take location of services where it is actually performed. Okay. So if a marine engineer registered in Tamil Nadu provides repair services to Mr. Musk located outside India for his ship, not for business purpose. Had it been business purpose, the location of recipient only will be taken as a place of supply, because exception number 4, in case of maintenance, repair or overall service in relation to ship or parts of the ship, we need to take place of supply as the location of recipient. only if it is for the business purpose. If it is not for business purpose, then we will take, this exception will not come. So physical presence of the goods required, location where service are actually performed will be taken. So accordingly in this case, we need to take location where service are actually performed. Located in territorial waters of India, and the place of supply is the location where service are actually performed, that is location of the ship. But as the ship is in the territorial waters, so place of supply shall be the nearest coastal state where the ship is located, and if the nearest coastal state is in Andhra Pradesh, then the nature of supply is interstate supply to the marine engineer. If the nearest coastal state is Tamil Nadu, then the nature of supply is intrastate supply to marine engineer, because if the marine engineer is actually located in Tamil Nadu, nearest coastal state Tamil Nadu intra. Suppose if the nearest coastal state is Andhra Pradesh, it is inter. But sir, we are determining place of supply under section 13. When we determine the place of supply under section 13, it should be deemed interstate, na? Correct. But here section 9 will override that point. So even if place of supply is determined under section 13, supply in territorial waters may be intra or inter, as section 9 overrides any other provisions of IGST Act. Then section 16 talks about zero rated supplies. There are two transactions which are regarded as zero rated supplies, that is export of goods or services, supply of goods or services to SCZ. This is SCZ unit or SCZ developer in relation to authorized operations of SCZ. That is very, very important. That should be in relation to authorized operations of SCZ. Whether GST paid on inward supplies, yes, and that can be availed as ITC, but that is subject to blocked credit under 17 subsection 5. Means when I outward supply is zero rated, I can definitely take ITC on my inward supply, but that is subject to block credit. And I have two options. Option number 1, upon zero rated supply, I will pay IGST and I will use my ITC for payment of IGST, and I will get the refund of gross IGST. Option 2, I will not pay any IGST on zero rated supply, and it will be under bond or LUT, and thereafter I will get the refund of ITC on inputs and input services. So don't pay any GST on outward supply and supply it under bond or LUT, but get refund of ITC with respect to GST paid on inward supply, that is inputs and input service only, but not capital goods. Then government on recommendations of council can notify class of persons. Right now only class of persons are notified, but class of goods or services is an amendment for number 25. Right now only class of persons who are allowed to make zero rated supplies upon payment of IGST. Accordingly, this is the chart that you need to remember. There are some notified goods or notified services like pan masala, tobacco and tobacco products, essential oils other than those of citrus fruit. So it is neither option 1 nor option 2. You cannot claim the refund under both the options. If it is export of goods upon payment of customs duty, if you are exporting goods only upon payment of customs duty, then you cannot claim the refund under option 2. You can claim the refund only under option 1. Whereas export of exempted goods or services, export of exempted goods or services, as it is exempted, you cannot pay IGST. So option 1 is not possible. So only option 2 is possible. In all other cases, we can claim either option 1 or option 2 with respect to each consignment. So they can decide with respect to each consignment which option they need to go for, either option 1 or option 2. Then zero rated supply means you need to understand that the tax incidence will become zero. That is the meaning of zero rated supplies. And you can see here, so this is the interconnection. Location of supplier in India and the place of supply is outside India. And if other conditions are satisfied, then it will become interstate under 75A. Why interstate under 75A? Supplier in India, place of supply outside India. So it will become interstate under 75A. As it is interstate and other conditions also satisfied, so it will also become export of services, and it will also become zero rated supplies. So it is interstate, it will become export of service, it will also become zero rated. So two options are available for payment of GST. What are those other conditions? Other three conditions: recipient outside India, consideration in convertible foreign exchange or Indian rupees wherever permitted by RBI, supply and recipient or not to establishments of same person. What if any one condition out of these other conditions, any one condition is not satisfied? Then what will happen? It is still deemed interstate. Why? Because the supplier in India, place of supply outside India, still it is deemed interstate 75A, and it will not become export and it will not become zero rated. So normally we need to pay IGST. Normally pay IGST unless it is exempted. Then next, supply of goods or services between SEZ and DTA. Suppose if it is supplied to SEZ unit or SEZ developer, then we need to see, is it for authorized operations of SEZ or for others? If it is for authorized operations of SEZ, then it will be treated as interstate 75B, and it will also become zero rated. When it becomes zero rated, two options are available for payment of GST. Suppose if it is supplied to SEZ unit or developer, but not for the authorized operations of SEZ, for others, then also it will become deemed interstate under 75B, because in case of 75B they have not given that supplied to SEZ for authorized operations, only for zero rated they have given. So deemed interstate, it is deemed interstate, IGST is payable unless it is exempted. Suppose if it is supplied by SEZ unit or SEZ developer, by SEZ unit or SEZ developer, it will always be deemed interstate under 75B. It is deemed interstate under 75B, supplied by SEZ, supplied to SEZ or supplied by SEZ, it will always be deemed interstate under 75B. Whether IGST is payable, yes, IGST is payable unless it is exempted. Okay, always we need to pay IGST. So this is the treatment with respect to this. So supplied to SEZ, supply by SEZ, and export, etc. So this is a comprehensive chart. Definitely there will be some questions on application of this, so that we have to apply our mind and we need to decide as to whether it is CGST, SGST or IGST, etc. and all, and also whether it will become zero rated, which option they are deciding. So this is about the charge under IGST Act.